Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden between the lines of corporate filings. And today we've got a real doozy, a report that makes you wonder if they are selling something or buying trouble itself. Get ready. Because Liberty ENC Incorporated just dropped a report that involves billions in debt and some very interesting financial maneuvers. We are diving deep into their latest filing to see what it all means for the future. And hey, if you like getting these kinds of straight to the point insights from complex financial documents, make sure you are subscribed. You can also join our Discord community. The link is in the description below for even more discussions. Alright, let's get straight into it. Liberty ENC Incorporated, or as they call themselves, the company, has filed a report detailing some pretty significant financial activities. The earliest event reported here is the 2nd of February 2026, which feels like the future but is actually just very recent financial news. The big story here revolves around a massive offering of what they call 0.00% convertible senior notes. Now, what does that mean in plain English? It means they've raised a huge amount of money, $700 million to be exact, by selling notes that don't pay regular interest. Instead, these notes can be converted into shares of the company's stock. Think of it like borrowing money, but the repayment could potentially be in the form of company ownership instead of just cash. They even bought an extra $70 million worth of these notes, taking the total to $770 million. This is a substantial amount of capital. Now, how did they sell these notes? Well, they didn't go through the usual public offering process. Instead, they sold them to a few investment banks called initial purchasers, relying on a special exemption from registering with the authorities. These banks then turned around and sold them to big institutional investors who are believed to be qualified buyers. This is a common way to raise a lot of money quickly without the delays of a full public registration. After all the fees and expenses, the company ended up with about $746 million in cash from this offering. That is a lot of money to play with. So what are they doing with it? A chunk of this money, around $109 million, was used to pay for something called capped call transactions. This sounds complicated, but it is essentially a way to limit how much more expensive it could get if the stock price shoots up. It is like buying insurance, but for the potential stock conversion. It helps reduce the dilution to existing shareholders if a lot of these notes are converted into stock. The rest of the money, which is quite a bit, is earmarked for two main things. First, they are going to pay down some existing debt. This is usually a good sign, showing they want to clean up their balance sheet. Second, for general corporate purposes. This is a catch-all phrase that means they can use it for anything from operations to investments. It is important to understand what these notes are. They are unsecured, meaning there is no specific asset backing them up. They are senior obligations, which means if the company goes bankrupt, these note holders get paid before some other creditors, but after secured lenders. These notes are due to mature in March of 2031. That is about 5 years from now. Now, for the conversion part, for every $1,000 of these notes, you can convert them into about 29 shares of the company's class, a common stock. This means the initial conversion price is around $34.5 per S-share. This is interesting because it represents a premium of over 30% compared to the stock price on the 3rd of February 2026, which was about $26. We'll see if that premium holds, or if the stock price moves significantly. The company has the option to buy back these notes early, starting in March 2029, but only if the stock price has significantly increased, specifically if it has been at least 130% of the conversion price for a good chunk of time. This is designed to protect the company from having to pay out a lot of stock if the original conversion price was set incredibly low and the stock has soared. If something big happens, like a merger or a significant change in the company's business, which they call a fundamental change, note holders can demand to be bought out at the full principal amount. This is a protection for investors in case of major disruptions. The agreement, called an indenture, also lists what are considered events of default. These are essentially situations where things have gone so wrong that the notes can be declared immediately due and payable, or in cases of bankruptcy, they automatically become due. One of the key defaults is if the company or its major subsidiaries fail to pay back an amount of debt exceeding $150 million. This is a significant threshold and shows that the company is managing a considerable amount of debt across its operations. It is a clear signal to watch their overall debt levels closely. If bankruptcy or insolvency strikes, the entire principal and any accrued interest on all outstanding notes automatically become due. This is a standard but crucial protection for lenders. The company also can't just sell off all its assets or merge into another company unless the new entity agrees to take on all the debt obligations under these notes and no defaults are happening. This is another layer of protection for the note holders, ensuring their investment is protected even if the company structure changes drastically. Going back to those capped call transactions, it looks like they are separate deals with the same financial institutions that initially bought the notes. These are designed to manage the risk of stock price movements related to the conversion of these notes. The cap price for these transactions is around $65.1. This is a huge premium, 150% above the stock price on the 3rd of February. This strongly indicates that the company is trying to significantly mitigate the potential dilution if the stock were to soar, essentially capping their responsibility. The goal here is clear. They want to reduce the impact on existing shareholders if these notes get converted into stock. It is about managing expectations and the financial fallout of a successful stock price increase. It is also worth noting that the financial players involved in these capped call transactions might be buying or selling the company's stock to balance their own books. This kind of activity can sometimes influence the stock price, so keep an eye on market movements related to these events. This filing also touches on financial obligations. They've essentially created a significant financial obligation through this note offering. And here is where they confirm that these securities, the notes, and any stock that might be issued from them have not been registered with the main securities regulators. They are relying on those exemptions we talked about earlier. They're essentially banking on the fact that the investors buying these are sophisticated enough to handle unregistered securities. If the notes are converted, the shares issued won't need separate registration because no commissions are being paid for that conversion event itself. It is another legal nicety to keep the whole process smooth. Under other events, we see that the company had announced its intention to offer these notes back on the 2nd of February and then announced their pricing on the 4th of February. This means the market had some heads up about this large financial move. Let's look at the bigger picture here. Liberty ENC Incorporated is clearly in a phase of significant financial restructuring. They've raised a substantial amount of capital, likely to shore up their finances, pay down debt, and potentially fund future growth. The use of convertible notes and capped call transactions suggests a nuanced strategy to raise funds while attempting to minimize dilution to existing shareholders. Especially if the stock performs well, this indicates a management team that is actively trying to balance fundraising needs with shareholder value. However, the sheer amount of debt involved, even if they are using new capital to pay some of it down, is a point of concern. The covenants and events of default within the indenture are standard, but highlight the risks associated with such large financial commitments. A misstep in managing their debt or a significant downturn in their business could have serious consequences, triggering those default clauses. The strategy of issuing convertible notes with these sophisticated hedging instruments, like capped calls, shows a company that is willing to employ complex financial tools to achieve its objectives. This can be a sign of smart financial engineering, but it also means that investors need to be aware of the intricate web of agreements involved. The success of this strategy will ultimately depend on the company's ability to execute its business plan, generate sufficient cash flow, and manage its debt effectively. Looking ahead, the key will be how they utilize the remaining proceeds for general corporate purposes, and if they can effectively service their debt obligations. The stock price will also be a critical factor determining whether these notes are converted into stock, impacting ownership structures, or if the company redeems them. So, what is my take? Liberty ENC Incorporated is making bold moves to manage its financial position. They're raising a war chest of cash and using sophisticated financial instruments. This signals a company that is focused on stability and potentially growth, but it also comes with inherent risks tied to debt management and market volatility. Investors should keep a close eye on their debt, to equity ratios, and their ability to generate consistent profits to service these obligations. The success of this financing will be a major determinant of their future trajectory. Alright, that is our dive into Liberty ENC Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. And if you found this analysis valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out the Discord link in the description for more discussions. Thanks for watching. See you next time.